This is the CMC Markets Connect Volatility Roundup for the week concluding February 11th. There wasn't too much of a pattern to be seen in terms of increased volatility across single stock CFDs last week, although two companies which did stand out were Peloton and Ocado. Both fared well from COVID lockdowns, but over the last few months have seen notable declines from recent highs. This week, however, Peloton jumped, albeit briefly, following news of cost savings and that the CEO was to be replaced. That lifted one-day vol to almost 300%, up from monthly averages of around 225%. Ocado also slumped off the back of its results, but bargain hunters were seen to be moving in, looking at the technology potential rather than direct retail sales. One-day vol here got to 126% against a monthly reading of 76%. Crypto vol remains comparatively subdued after the quiet start seen to the month. Price action is, however, recovering here, and ETC, Ethereum Classic, was a standout on the week, being flagged for high vol on 4 days out of 5. The asset topped out at 112% on Friday, up from a monthly average of around 90%. Oil prices were pushed into focus again, most notably around midweek when a bigger than expected draw of crude oil was noted in the US inventory figures. As a consequence, the US crude oil contract printed one-day vol of 36% on Wednesday. In terms of softs, it was OJ that stood out, with citrus harvest forecasts from Florida painting a bleak picture and driving underlying prices significantly higher. One-day vol topped out at almost 109% on Monday, up from the monthly reading of 85%. As for fiat currencies, the ruble remains active amidst those ongoing concerns over Moscow's intentions towards Ukraine. But the Polish zloty and Hungarian forint are also finding two-way price action. Inflation is resulting in fairly aggressive central bank policy reactions, but this risks being countered by the fact that both nations share a border with Ukraine. Against the greenback on Friday, ruble volatility hit 24.9%, the forint got to 17.4%, and the zloty 16.2%. Looking into next week, expect those Eastern European currencies to remain active amidst the geopolitical situation. That also has the potential to spill into oil and gas markets, whilst the release of RBA meeting minutes on Tuesday is likely to drive interest in the Aussie dollar, as this ought to help refine guesses over the timing of that rate hike.